Thank you, operator. Hello, everyone, and thank you for joining us today. Baozun's earnings release was distributed earlier today and is available on our IR website at ir.baozun.com, as well as on GlobeNewswire services. On the call today from Baozun are Mr. Vincent Qiu, Chairman and Chief Executive Officer, Mr. Junhua Wu, Chief Growth Officer, and Mr. Beck Chen, Chief Financial Officer. Mr. Qiu will review business operations and company highlights, followed by Mr. Chen, who will discuss financials and guidance. They will be available to answer your questions during the Q&A session that follows. Before we begin, I'd like to remind you that this conference call contains forward-looking statements within the meaning of Section 21E of the Securities Exchange Act of 1934, as amended, and as defined in the U.S. Private Securities Litigation Reform Act of 1995. These forward-looking statements can be identified by terminology such as will, expect, anticipate, future, intent, plans, believe, estimate, target, going forward, outlook, and similar statements. Such statements are based upon management's current expectations and current market and operating conditions, and relate to events that involve known or unknown risks, uncertainties, and other factors, all of which are difficult to predict and many of which are beyond the company's control, which may cause the company's actual results, performance, or achievements to differ materially from those in the forward-looking statements. Further information regarding these and other risks, uncertainties, or factors is included in the company's filings with the U.S. Securities and Exchange Commission. The company does not undertake any obligation to update any forward-looking statements as a result of new information, future events, or otherwise, except as required under applicable law. It is now my pleasure to introduce our Chairman and Chief Executive Officer, Mr. Vincent Qiu. Vincent, please go ahead.
Thank you, Ellen, and thanks everyone for joining our earnings call today. We delivered another solid quarter with total GMV increasing by 55% year-over-year. Growth continues to be driven by the existing online stores and improved efficiency as we invest further in developing new and innovative products, back-end order and warehousing systems, and other omni-channel solutions. We expanded the number of brand partners we work with to 132 at the end of Q3, an increase from 146 during the same period last year. The newly added brands are mainly in apparel, cosmetics, accessories, and FMCG categories. In particular, we again beat our fierce competition to sign contracts with one of the world's largest multinational toy manufacturing company and a leading luxury winter clothing company. Our pipeline remains as strong as ever, with a number of leading global brands expected to come on board in the near future, including ones in apparel, luxury, and FMCG categories. I'm proud of the experience and the capabilities we have accumulated from participating in the single-day shopping festival over the past decade. This year, total order value settled through payment gateways on all of our e-commerce channels reached a new record high of RMB 6.55 billion, an increase of 31% compared to last year. Technology plays an increasingly important role in our strategy, especially when it comes to ensuring the seamless integration of our IT infrastructure, online store management, digital marketing, customer service, warehousing, order fulfillment, and back-end administration. This expanded array of solutions we have at the ready allows us to settle over 18 million orders on Singles' Day, an increase of 49% compared with last year. This again demonstrates the strength of our strategy, our executional capabilities, and the strategic foresight to ensure we are adequately prepared and all systems are working as intended. To strengthen our position as the leading brand e-commerce business partner and technology solution service provider, we are expanding the scope of our service through targeted investments in innovation, productization, and hiring of engineers. Teams from our technology and innovation centers located in Beijing, Shanghai, and Chengdu now consist of over 800 IT engineers. These teams were instrumental in our preparation for Singles' Day, where they significantly improved the efficiency of our order and the warehousing management systems. We continue to refine and update our in-house development shop front products for SMEs, iOS, as well as other technologies which we expect will further increase overall efficiency and drive future growth as they gradually become commercialized in the near future. We strongly believe that investing in R&D will lay a solid foundation for our long-term sustainable growth. Leveraging our deep experience and innovative self-developed tools, we expanded the omni-channel matrix of solutions we are able to offer brands so that they can rapidly establish an online presence and benefit from the enormous growth opportunities in China's e-commerce market. During the quarter, we won the award of Smart Store Operations at the 2018 Tmall New Retail Partners Conference in recognition of our cutting-edge solutions. As an industry pioneer, these same innovative tools can be applied to domestic brands. We successfully connected and integrated two leading domestic apparel brands, offline stores with their Tmall stores and brand hubs. We also took over daily operations for the online stores and helped to drive targeted online traffic to offline stores. The value these services created in the new retail era are increasingly being recognized by domestic brands, and we are confident we will be able to further expand our market share with them in the future. This quarter, we also launched several new WeChat mini programs for several apparel brands and the leading home furnishing brand. We will continue to closely monitor changes in the market, anticipate the needs of our brand partners, and develop solutions and services across different channels. Our digital marketing solutions continue to gain popularity among existing and potential brand partners as our work becomes increasingly recognized across the industry. These capabilities play an important role in acquiring new customers for our brand partners. Last week, we were awarded the Bronze Award of Data-Driven Marketing at the 2018 Great China Essay Awards, the preeminent advertising award in the industry. Finally, before turning the call over to Beck, I'd like to warmly welcome Robin Lu as our new CFO. Robin will take over later this month for Beck, who is leaving to pursue other opportunities. I would also like to thank Beck for his years of service. We are grateful for his contributions and wish him the best of luck in his future endeavors. Robin joins us with extensive leadership experience in financial management and the capital markets. We look forward to working with him to further grow our business and fortify our leading position in the industry. With that, I will turn the call over to Beck to go over our financials. Thank you.
Thank you, Vincent. Before I go into my remarks, I would like to take this moment to thank Vincent Qiu and the entire team at Baozun. I'm very grateful to have had the opportunity to work with you all here for the past 6 years, and will cherish every moment of it. I will stay until end of this month and work closely with Robin to ensure a smooth transition. Robin will be a fantastic addition to the team, where his tremendous experience will help to lead the company into its next stage of growth. Let's now go over the third quarter financial results. We delivered another solid quarter with GMV increasing by 55% year over year, and the non-distribution GMV in particular increasing by 62% year over year. We believe year over year comparison is the best way to review our performance. All percentage changes I'm going to give will be on that basis. Firstly, the total net revenues increased by 25% to 1.1 billion RMB. Product sales revenue increased by 7% to 505 million RMB. The increase was primarily attributable to the increase in product sales revenue resulting from the increased popularity of our brand partners' products and Baozun's effective marketing and promotional campaigns, which was partially offset by the transition of the leading electronics brand partners business from distribution model to the consignment model in September 2017. This is, however, the last quarter with this transition effect. Services revenue increased by 45% to 606 million RMB during the quarter. The increase was primarily attributable to the rapid growth in sales from existing brand partners and the addition of new brand partners under the company's consignment model and the service fee model. The total operating expenses were 1.1 billion RMB compared to 862 million RMB in the same quarter last year. In particular, cost of products decreased to 401 million RMB from 408 million RMB last year, primarily due to the transition of a leading electronics brand partners business from distribution model to the consignment model in September 2017, and improved margin of product sales to 20.5% from 13.8% for the same quarter of last year. Fulfillment expenses rose to 262 million RMB from 173 million RMB last year, mainly due to an increase in GMV from the company's consignment model business, in combination with increased warehouse rental expenses. Sales and marketing expenses rose to 301 million RMB from 222 million RMB last year, primarily due to the addition of online store operation staff and an increase in promotional and marketing expenses associated with the online stores operated by us. Technology and content expenses rose to 70 million RMB from 36 million RMB last year. The increase was primarily due to increased investments in innovation and the productization and the recruitment of additional technology-focused staff. G&A expenses rose to 41 million RMB. The increase was primarily due to an increase in administrative, corporate strategy, and the business planning staff. Income from operations increased to 39 million RMB, while operating margin improved to 3.5% compared with 3.1% in the same quarter of last year. Non-GAAP income from operations was 61 million RMB, an increase from 41 million RMB in the same quarter of last year, while non-GAAP operating margin improved to 5.5% compared with 4.6% in the same quarter of last year. Investments in technology, innovation, and productization were 20.1 million RMB, which we believe will enable us to expand our addressable market and strengthen our long-term competitiveness. Excluding these investments, non-GAAP income from operations increased by 93% year-over-year. In Q3, net income attributable to ordinary shareholders of Baozun rose to 13 million RMB, an increase of 36% from the same quarter of last year. Basic and diluted net income attributable to ordinary shareholders of Baozun per ADS were 52 cents RMB and 50 cents RMB respectively, compared to 40 cents RMB and 37 cents RMB respectively during the same period of last year. Non-GAAP net income attributable to ordinary shareholders of Baozun rose to 51 million RMB, an increase of 47% compared with the same quarter last year. Basic and diluted non-GAAP net income attributable to ordinary shareholders of Baozun per ADS were 90 cents RMB and 86 cents RMB respectively, compared with basic and diluted non-GAAP net income attributable to ordinary shareholders of Baozun per ADS of 64 cents RMB and 59 cents RMB respectively for the same period of last year. That completes the profit and loss statement for the quarter. As of September 30, 2018, the company had 445 million RMB in cash equivalents, and short-term investments, a decrease from 557 million RMB as of December 31, 2017, primarily due to inventory procurement in preparation for Singles' Day 2018. Turning to the guidance for the fourth quarter of 2018, we expect total net revenue to be between 2.2 billion RMB and 2.25 billion RMB. Our daily sales momentum during the fourth quarter of 2018 continues to remain strong and outpace the growth on Singles' Day this year. As such, we expect our GMV for the fourth quarter of 2018 to grow 40 to 45% on a year-over-year basis, while our services revenue during the fourth quarter of 2018 will grow faster than the GMV growth. This updated expectation reflects the impact of softening retail sales growth from a slowing macroeconomic environment. While the impact on Singles' Day was greater than expected, this was a one-off event. We remain confident and encouraged as growth in most categories outside of Singles' Day continues to be strong and higher than the industry average. And we believe our improved efficiency, investment in innovative technology, and the development of a variety of new omni-channel solutions will continue to attract new brand partners and customers. This concludes our prepared remarks. Operator, we are now ready to begin the Q&A session. Thanks.
Thank you. We now begin our question and answer session. If you have questions for today's speaker, please press 01 on your telephone keypad and you will enter the queue. After you're announced, please ask a question. If you find your question has been answered before it is your turn to speak, please press 02 to cancel the question. So once again, please press 01 on your telephone keypad to ask a question. The first question is Bonnie Wong at HSBC. Please go.
Hi, management. Thank you for taking my question. Sorry, can you hear me well? Hello?
Yes.
Yes, sorry. Hey, so my first question is, I actually have two questions here. One is that actually on the macro side and also on the trade war, how do we see that in terms of the overseas brand, in terms of their strategies adjusting into China in terms of for us? And then my second question is that if we look at the overall margin, it's actually slightly down a little bit this quarter, but I guess longer term, we probably will see more upside in terms of the margin as we go in terms of the scales and also our business model going into hopefully more like an asset-light model with our software infrastructure business. So how should we think about for margin trend on that front? And then on the last question is more housekeeping in terms of the same-store sales growth. How should we see that? So if you can help us address some of these questions would be very helpful. Thank you, management.
Okay, thank you. So, Binnie, I will answer the second and third question first, and I will leave your first question to Vincent. So, for the second question about the margin, so basically our margin, if you look at the margin against the revenues, it's growing on year-over-year basis, but still we put more investment into technology, just like we said. So if we exclude the innovations investment, our non-GAAP operating income could increase over 90% on a year-over-year basis. And we believe in the coming years, the investment will be gradually paid back, either help us save more expenses to increase the leverages and the efficiencies of the OPEX items, or we can just generate more revenues, and especially services or product revenues from outside. So this is generally, I think this is generally the general guidance. And the question about the same-store sales, For the third quarter, for the single quarter, our same-store sales growth is 45% for the same store.
Okay, Binnie, I think your first question is about Haitao and Daigou, right?
Yes, that's right. And also in terms of the overall with the macro situations, I think people will worry about consumptions. How do we see in terms of the how is the macro weakening conditions impact Baozun or maybe our brand strategies in China? Overseas brands expansion, because majority of our brands are overseas, right? And then so how should we think about that? And also, as you said, Haitao business. Thank you.
Okay. We have some business for the cross-border business, so that is different from the overseas purchase service, this kind of thing. So we have seen a strong growth in that sector, although in the absolute amount it's not a very huge number. Right now, we think we can still see strong demand from a Chinese customer for the premium national brands. And I think the government policy right now is turning more strict to the Daigou and Haitao, and we think it's a good impact for our business. But in this case, the Chinese consumers need the good brands, and also the brands want to enter into the China market. And because Daigou and Haitao now are limited, so we will be a better way for them on that their business in China. So this gives us more, tailwind to grow our business and working with more potential international brands.
Okay, thank you. And may I just have a quick follow-up in terms of on the margin side, in terms of your investment priorities, because of course after the Double 11, we see that there are the efficiencies in terms of like the number of orders that can be done through the China logistics has been improving. I think they said that the first 100 million parcels will be delivered within like 2.6 days, right? So how is our logistics business infrastructure? I mean, we are closely working with Alibaba China on this part. So how should we look at that like down the road in terms of our strategy, our role here, servicing the brands, because we're also investing a lot in our logistic capabilities. So how is our role of Baozun fit into the cooperation with the China? That's one question. And I guess second question is that I think opening remark, Vincent mentioned that we'll be investing more in terms of our R&Ds. So given that we have investment into R&D technologies and also into our logistic infrastructures, and also probably into other some more new innovative ideas, strategies, areas that management mentioned, how should we prioritize? Like in management's eyes, how will you prioritize all this investment? Thank you.
Okay, so Binnie, let me try to answer your question. Basically, this is like the investment in logistics and the investment in the R&D, the outlook. So basically, let's say generally, we all need to put some pre-investment into logistics in any kind of our capabilities. So, but for logistics, it's more like usually we put investment in Q1, Q2, even Q3, but we may be fully pay back in Q4 because the GMV is very strong, so we can leverage everything, every dollar in the warehouse. So basically, it's like invest in during the year, and you are pay back also during the year in Q4. But for R&D, it's a more longer term investment process. So we need to invest. Actually, we started to invest from last year. So right now, this year we keep to invest, and we already see a lot of indicators, and some investment and products to be launched and also to be tested trial by our own people and even some outside customers. But R&D expenses usually you need to wait, be more patient to wait it to be paid back because it's more creative things. It's not like logistics. So R&D is more creative things.
Okay. And what about the investment priorities in terms of, if you think about down the road in terms of business, maybe actually examples of like the R&D investments into 2019, the key areas that Vincent mentioned in the opening remark that if you invest more in that, where are the areas in terms of R&D spending?
Okay, so you may already know from the financial statements that for the first 3 quarters of this year, the R&D expenses increased like at around 100% on a year-over-year basis. But we expect that the growth of R&D expenses in 2019 will be greatly decreased compared to right now. Right now it's like triple-digit growth rate, but in year 2019, we think the growth rate will be much more decelerated compared to this year. So because we already have established the foundation of the team, so we don't need a lot of more people. We need more people, but not a lot of more people. So which can help us to gradually to make the business more mature, and also we just wait for the products to be launched to the public as soon as possible to generate meaningful revenues in the coming future.
All right. Thank you so much. Appreciate it. Thank you.
Next question is from Joyce Zhu at Merrill Lynch. Please go ahead.
Good evening, Vincent, Beck, Robin, and Alan. Thanks for taking my questions. My first question is to Vincent regarding the overall competitive landscape. We have seen now more and more new e-commerce channels, including like PDD, the platform, or like WeChat, which is a social commerce channel, emerged. And we want to know like and also we have seen some like close competitor to Baozun, who's also e-commerce solution providers. Actually, they fade out recently out of business. So want to understand in terms of the overall landscape, how did you look at in terms of competition or like future development strategies? Any impact or like, or insights into this area? And my second question was a follow-up to Binnie's question in terms of the soft macro condition. How should we understand Baozun's GMV growth or revenue growth for 2019? Thanks a lot.
Okay, thanks for the question. Right now we think today Baozun is representing a lot of international brands, conducting their e-commerce business in China. That is a major revenue stream of Baozun. Right now we are doing quite a good job. So we take a position, we think the same way as the brands are thinking, and that's why we are taking omni-channel position to operate their business on different platforms, including the major one like Tmall and also some other platforms, and their brand official web stores, and also some emerging platforms like Pinduoduo and also WeChat, this kind of social related commerce platform. So that is what we are doing for them, and we will keep doing so in the future. This gives us a chance to be a one-stop shop, omni-channel based solution to the target brands. We feel this is very valuable to their growth in China. And also, in the future, the other important thing we'll do for the brands will be the technology enabling to their business. So in this case, we can not only make the current business development of the existing brands more smoothly, and then we can also help them to reduce their cost, bring more efficiency improvements to them in the same time. So in this case, that is technology enabling. We are developing more and more technology tools, not only to help the existing brand to be more efficient, and also giving more a broader customer base can work with Baozun and to enjoy all the experience and solutions we gained from the past decade and help them to be more and more successful.
Okay, so about the second question about the GMV outlook for the coming years, just like we said in the prepared remarks, we believe the capabilities of Baozun could attract more and more brands. So for us, not only we grow the same stores, but also we grow the number of brands, and also during the quarter we grow the number of brands much more than the prior quarters and the prior years. So we believe as long as we can have more brands, even if those brands are already on those marketplaces like Tmall, JD, or even PDD, but to Baozun, they are still new brands to us. So we believe our penetration potential is very, very, very much bigger than the current the time being. So that's why we believe our growth rate of the GMV and also the revenues should be much more than the industry average.
Gotcha. Thanks.
Next question is from Monica Chen at Credit Suisse. Please go ahead.
Good evening, management. Thank you for taking my question. So I have two questions here. So number one is regarding our 4Q GMV guidance. We do notice that we have lowered our GMV guidance to 40 to 45%, where previously we were talking about something over 60%, and also we delivered 31% in the Double 11 sales. So I want to understand what's the key reason for this revision down of our GMV. Is it because some particular brands, or is it like a broader slowdown across some of the certain categories? So that's question number one. And then my second question would be, so management talk about the potential launch of some of the new and innovative products and potential commercialization plan. And given we have been investing in these new products for quite a while, so when do we expect the launch of the new products? Maybe some around next year. And what kind of monetization are we talking about? Are we going to charge the like a based fee, or is it more like a percentage of the GMV? And how fast do we expect the ramp up of the new revenue line and the contribution to the total revenue? Thank you.
Okay, thanks for the question. I'll answer the first question, Monica. So, in terms of the 4Q GMV expectation, so we already count in all the effects, especially the Double 11 results, and also we look through all the daily sales, and we think the daily sales remain strong and outpace the growth on Singles' Day. But for the Singles' Day, it's just like some one-off event, one-off big promotion event. It counts like 40 to 50% of the quarter's GMV, but still it's not a quarter. It's just one of the days, one of the 90 days. So yeah, it is for the Double 11 day, it is impacted partially mainly by like leading the global smartphone brand, which is negatively impacted by some unhealthy price competition from the different marketplaces. But basically, we think it's just like it's under our control. So we think it may impact the GMV, but it may not impact a lot for the other line items. So after considering all those other days, the daily sales, we gave right now we gave the guidance 40 to 45% growth on prudent basis.
Okay, about the second one, talking about new products and solutions developed and its commercialization plan. Right now we are in the progress in developing different kind of softwares. First category will be the internal use core system, That is very important for us to handle the daily orders and fulfill them. So that one is basic. And then we have some of the tools, productive tools for the internal for use. So in this case, we can greatly reduce the cost and have a better manageability for the current business, given the management and also the clients a better visibility of the daily business. So that is there's huge potential for us to deliver in this kind of software. For the other SaaS-based or other SME related solutions, I think we're quite in the right track. And recently we have already have a number of different testing users already on the platform, on the SaaS platform, and we think this result is quite encouraging. Right now we are quite focused on the users, active users, and also the functionality improvements, and we are expecting to make the revenue and profits in the near future. Right now we think things, including the internal solutions and also the solutions for all outside users, quite on track.
Thank you. Well, can I have a quick follow-up on the guidance for QGMV guidance? Can management maybe provide some color on if we look at by distribution GMV and non-distribution GMV, what's kind of the growth outlook for fourth quarter?
Okay, so still we believe non-distribution GMV will grow faster in the overall GMV contribution.
Okay, thank you.
Next question is from Alicia Yap at Citigroup. Please go ahead.
Hi. Good evening, management. Thanks for taking my questions. And thank you and best wishes for your new endeavors. Robin, welcome to your new role. Two questions here. First is that wanted to get a better sense if management can share what is driving the better GMV outside of the single days. So given, if we back out, the GMV on single day and your guidance for 4Q, it is actually suggesting non-single days GMV is actually growing at 50 to 60%. So what are the categories that drive the strong traction from user outside of single days? And then second question is related to the recommended features change on Taobao app. So just wondering whether the change of the user traffic dynamics on Taobao will have any impact to how the brands on Baozun platform conduct or operate their business. And as a service partner, does Baozun experience any difference on sales, user demand, or the ROI? Thank you.
Okay, thank you, Alicia, and thank you for your question. So I'll answer the first question, and I'll leave the second question to Junhua. So for the first question about the GMV for the non-single day GMV, so like we said in the prepared remarks, we have seen for the most of the categories out of single day continues to be stronger than the single day. So basically, I would say excluding the smartphone categories, all the other categories is growing very healthy. This is a general outlook.
Okay, hi Alicia, this is Junhua from Baozun. So let me address your second question. First, I want to let you know that I'm not the good person to address all those details from the Taobao APP changing, but I can share with some colors from our as a service partner with Tmall, and then let you know that what kind of the changes we're getting from the change of the Taobao APP. So there are two dimensions from Tmall that are changing their APP. One is they're consolidating their data bank, which provides more accurate traffic gathering to our particular stores. And they're consolidating all those kind of Alibaba investment footprints across all those Alibaba investments like the Ali Music, Ali Trip, etc. So all those consumers happen to never click or mention or like the particular brand content will be consolidated into the data bank. And data bank is providing a lot of different dimensions based on different segmentation of data into AIPL, for example, like aware, interested, purchase, and loyal, which allow us to be driving more accurate traffic to our store by providing the right content to the right products. So as far as we know that this kind of data banking and the business model changing is really helping us drive a higher conversion rate. The second part is from the Tmall app changes is related to the, in Chinese we call that 千人千面, in English we use that precisation, which allows us, that technology allows us to create different kind of the consumer-facing scenes or schemes to provide different content or product listing for different kind of attributes of the consumers, like trendsetter, quality chaser, pragmatic consumers, and price-sensitive consumers. You can provide different content to those different group of consumers, which also allow us to be more accurate running our operations and assortment planning. So as far as we know from our perspective, we can say that Tmall's Taobao app changing is giving a positive support to our operations. Thank you.
Thank you.
Next question is from Chenbi at CICC. Please go ahead.
Hi, good evening, management. Thank you very much for taking my question. I have two questions here. The first question is regarding our cosmetics brands. I think management mentioned in previous calls that cosmetics will become the fourth largest category next year. So could management share with us the progress so far in seeking new brands in cosmetic category and some new brands in pipeline? And what do management think Baozun's unique advantages over other existing competitors or service providers in this category? That's my first question. And my second question actually is a follow-up on Monica's question regarding our guidance in 4Q. So if I'm doing the math right, our 4Q revenue guidance actually implies an over 40% year-on-year growth, and our GMV guidance is also around 40 to 45% in 4Q. But if we look at the previous patterns, our GMV growth usually outpace revenue. So could management share with us the rationale behind this guidance? Does this imply a much faster growth of our distribution GMV in 4Q? And if so, what's the driver behind this acceleration? Or if there's any other reasons we should be aware of? Thank you very much.
Hi, Chenyi, this is Junhua. Let me just address your first question and leave the second question to Beck. So regarding to our current business results, for the till now, so the business development for the consumer cosmetics beauty categories was very encouraging and very exciting. So we not just only signed the largest leading kind of the cosmetics group with all their independent brand store platforms by providing and replacing their global solution to do more localization and embedding a lot of local expertise for helping them to do more consumer engagement. We also signed a contract with the second large global cosmetics beauty group with the full operations of their independent brand store business. And starting from that point, we're going to have a very aggressive plan to expand to the omnichannel perspective. And we also signed the largest men's skincare brand of the world, helping them taking over all their Tmall operations. And so far, after we've taken over all that kind of brands, our YY growth compared to last year is definitely just going to be beyond 100%. So far, our current business development is quite encouraging, and we have a very strong and solid, pipeline waiting for us to close the deal. And you were asking about what kind of the advantage we're taking. I'll say that it's all about technology. If you mention about the cosmetics and beauty category, all those brands in those categories, they care their consumers a lot. Consuming caring is everything they want to look at, especially those, prestige and, luxury kind of beauty and category. So our technology can really help them to do that. For example, we have our innovation center. We're creating some kind of the voice of consumer products, helping to using data crawling, getting all those comments from the internet, and letting them know that how do consumers online really think about your brand, about your particular SKU or product. It's very helpful and very different from their offline experience. And also our CRM systems, our omni-channel system are helping them to expand their vision to be just from offline. There used to be a counter store or like a shopping mall store to be more omni-thinking and consolidating their online and offline penetration in the long run. So this is what I'm addressing for this question.
Okay, so for the second question about about more color of the 4Q GMV and the revenues. So just like we also said in the prepared remarks, historically we are in a very big transition process. So transitioning more distribution GMV to non-distribution GMV. So especially we transfer the biggest distributional partner in September 2017. So right now we think the transition process is already closed. So which means that generally our GMV growth will be much more in line with the revenue growth in the coming quarter and also in the coming years. So which is the major reason.
Thank you.
Next question is from Mickey G at China Renaissance. Please go ahead.
Hi, Vincent, Beck, Alan. Thank you for taking my questions. My first question is about our guidance. As management has explained, the Double 11 GMV growth is largely impacted by the price competition for a certain category. I just wondering whether this will carry on to the next year, and how should we think about the GMV growth for 2019? And then my second question is about the take rate outlook for non-distribution model for the fourth quarter this year. Thank you.
Yeah, that's me, Vincent. I'll take the first one. Talking about this year's Double 11 event, yes, we have some unexpected events happen during that day, which influenced a lot for category 3C category. Yeah, I think this one is just a one-time thing, and in the coming next year maybe or the next year. So each year the rules of Double 11 event will be changed a little bit. So I think we need to monitor and follow more closely with all this kind of change and adjust our strategy to eliminate any potential category, potential influence to some specific categories. And we also, plan to grow more new customers, as said, and more new channels to be developed. This also can help us balance between different brands, different categories, and different platforms to give us a more predictable, forecast of the big events.
Okay, so for the second question, Nikki, about the outlook of 4Q take rate or product margin. So generally we think the 4Q will be stable compared with 3Q, so it's more stable. So next year we think the take rate will be slightly increased because we sell more value-added services to those brands, and also we have more good brands on board, and they with better commercial terms. And also for the product sales margin, we have witnessed significant growth for the product sales margin in the past several quarters. And while we introduce some new distribution partners and the FMCG and the cosmetics categories, their gross margin is usually higher than our current like appliances in the 3C categories gross margin. So which means that gradually in the mix gross margin results, it could be improved as well.
Okay, thank you, Vincent. Thank you, Beck.
Next question is from Billy Learn at Haitong International. Please go ahead.
Hi, thank you management for taking my question, and Beck, I wish you all the best. Just a few questions. The first one is management mentioned that we have been helping brands for services outside on platforms such as WeChat mini apps. The question is, are we seeing clients more and more requiring services on platforms outside of Tmall's ecosystem? And if that's the case, do we see a trend where we are doing more services outside of Tmall's platform? And will that affect our cost in the longer term? And my second question is just a smaller question. On our balance sheet, it seems that we've picked up a new long-term borrowing. So I was just wondering what the nature of that is and what the reason for that is. Thank you.
Okay, I'll take the first one. Vincent here. Brands today, they are doing businesses much more a comprehensive way than before. Not only they need to take care of offline and online channels, and they also need to look into different online channels, including the existing big platforms like Tmall. So a lot of brands also rely on platforms like JD to produce generate GMV. And also, every brand now is considering to engage more with, especially the younger generation of the consumers. So that, makes them to pay more attention on the social commerce platform like Pinduoduo, WeChat, Xiaohongshu, all these kind of platforms. So today, they are comprehensive, so they need to engage consumers in a, not only transactional basis, but also a non-transactional basis. CRM system, these kind of different activities. So I think it is not the first day they are working with multiple and omni-channels. And we think in the future they will try to take more advantage of the omni-channel, landscape of Chinese e-commerce market.
Okay, so Billy, thank you. So for the second question about the long-term borrowings on the balance sheet. So yeah, so we have a chance to lock in a lower rate for long-term borrowing, but it's not so long. It's just beyond 1 year. It's within 2 years. But accounting-wise, we need to record it as long-term borrowing. So, but next year it will be transferred to the short-term borrowing. So because we can lock in a lower rate. So we think it's economically, we should do this.
Thank you.
The last question for today is from Tian Hou at TH Capital. Please go ahead.
Yeah, good evening, management. So the question is related to the brand partners. So I saw in Q3 you added 10 brand partners and GMV partners. So I wonder Q4, how many do you expect to add it on your platform? And also in 2019, can you give us some color on how many brand partners do you expect to have on your platform? That's my question. Thank you.
Okay, thank you, Tian Hou. So basically, in the past several years, in the past 2 years, every year for the full year, from January to December, we add around 20 number of brands into our portfolio. So but for this year, just for the first 3 quarters, we already added in the 20 new brands. So we believe for the year end, we may add more, like around maybe 5 to 6, but not too much because it's already close the year end, and usually those new brands will miss the Double 11 campaign, so they will wait till the next quarter. And also for the next years, especially like 2019, we will be still very aggressive in acquiring new brands. So we already, just like we said before, and also Junhua mentioned before, we already have a very good pipeline, including FMCG brands, cosmetics brands, apparel brands, luxury brands, yeah, all those brands, and even some domestic brands. So in the pipeline, so we think next year it could be, even stronger.
Okay, thank you so much. That's all my question.
Thank you. This concludes our Q&A session, and now hand it over back to Ms. Ellen Qiu for closing remarks.
Thank you, operator. In closing, on behalf of the Baozun management team, we would like to thank you for your participation in today's call. If you require any further information or have any interest in visiting us in China, please let us know. Thank you for joining us today. This concludes the call.
Thank you for participation, and then you may disconnect. Thank you.